Welcome everyone to the Kindle Report. It's a special report. I see somebody asking, is there a special event going on? Yeah, just here. No, nothing in the markets necessarily. We're seeing a bit of a decline. Sorry about not being able to do a video last night, but we can kind of set things up for the weekend as we come into the close here. So we'll hang out to the close. I've got a couple things to talk about, really looking to interact with you folks for the most part. So, like I said, a couple things to cover. Some of the trivia, while we're still getting some people to come live, hopefully more folks show up. I know I see a bunch of different names, some of the nighttime names, but I see a lot of different names here on the timeline than normally show up in the evening. So welcome to those of you that don't normally get a chance to be live. I see somebody in Holland and around the planet, so it makes sense. So let's just start here. We'll start with some trivial stuff while the room's still filling up. Is new CEO at Twitter. So what does it mean? Somebody used to run ABC, been around, a lot of scuttlebutt going around. Worked with the WEF, a lot of things flowing around. There's been a number of Twitter spaces today discussing this. I have no clue. Elon's a pretty smart guy. He's trying to run the company and move things forward. So hopefully he's making good choices. He typically has, even when they're very controversial. So we'll see how this all plays out. I think it's 6 weeks away anyway. We got supposedly Tucker Carlson's coming on to do his content. Is he going to be okay with this woman that's coming on? I think the answer is yes. Anyway, she's kind of a middle of the road. She plays both sides. I think she was appointed with the Trump administration. There's a whole bunch of mixture. So hopefully she's driving down the middle, sometimes left, right. It's all good. As long as they keep the censoring out of the game, we should be good to go on Twitter. I see somebody, girl power. Hey, listen, I'm all for you gals to do wonderful things in life. I don't like diversity hires. We've already seen some of those disasters out there. You're qualified, you get the job, right? That's how it should work. So hopefully, I don't believe that's probably the case at all from that standpoint. A couple things. Let's get into talking about the markets. Our room's filling up a little bit. We'll see how we get going here today. But the bottom line is we're seeing the markets come under pressure again. But in real terms, last week we went out at 41.51, and right now we're trading 41.15. So we're down 0.69 on the session. I believe that we're getting close to the lows of the day. I believe 14 is R3. I have the numbers at my desk at home. I came over to the studio. So we're definitely seeing some pressure coming in here, and I'll set it up a little bit here as we go forward. A couple of more announcements, and we're starting to see the room fill up a little bit now. A couple other announcements. The room I'm sitting in right now is being systematically torn down. I'm rebuilding the entire studio. I've got a ton of stuff going on, actually starting Sunday, and so hopefully I won't die of fumes. We're tearing down just about everything, rebuilding a new trading desk and some really cool stuff, and I hope to have camera angles to bring you into that room as well. So it's a whole new revamp of here at my office, the studio, the trading. I just got a new trading computer, pretty amazing, and I will tell you about it when we come in, but everything's being upgraded big time. And so I'm just trying to get everything set up so that we can move forward in a good way. I'm still trying to figure out, I have done, those of you that are on here, just a couple more minutes of going on here. Is I put you folks on the channel here through all kinds of of gyrations of me being gone, changing, going from produced videos to live streams every day, all of that stuff. So we're really working also on the background, a couple things. I just get some business things together here. Is we're working on probably some new formatting on the channel itself. We're hoping to have the next suite of indicators out very soon, and then ultimately we'll be starting some mastermind courses which will cover WaveTech, Portfolio Expert, and the indicators. So we'll be a whole lot of stuff. We're reworking websites. We're just kind of, it's a new process being built around here altogether. So hopefully when it's all done and said, we'll have some stability going forward. There's a number of things that I have on my plate that are taking a lot of my time, so I need to be able to focus and keep all the tasks that I have to go. So, okay, let's get back into the markets here. Let's go ahead and let's cut over and go to the hourly chart that we usually start with every night, and just get into the flow of the markets. It's interesting, and I think I'll play a couple scripts since we have a couple hours here today to hang out. So I'll just try to keep everything rolling along the best I can. And if you do have questions, I'll do a segment, and then if you have things you would like me to talk about, this is kind of a casual meeting, ending the week, all that stuff. You can see something interesting. We got red bars all the way down from, let's see here, right around, this would be 6 a.m. New York time. We've just been on a steady selling mode here. And it looks like we're trying to flatten out, but you can see the projected SMA right here is still showing that angle of attack down. So we're going to stay below that, but that's way above the markets right now. That's at way up here at 4132. It's not even in play right now. And in fact, we'll go over to, we'll look at the 5 and 1 minute as well as we go through today. Since we're intraday, I can maybe show you some techniques, do a couple things. We'll see what comes about here on it. But I think what I will do real quick here is I am going to run a replay just so you can see how this thing started to set up last night. And this was going from, so the times that you see on the bottom of the chart are Pacific times. Okay, so that is 3 hours later obviously for New York. But let's just run this script because I'll try to run it at a bar at a time. What you'll see is the PPM 1 is forecasting a cut through the first derivative, maybe heading down toward the next levels. Let's see how this forecast goes as we put another bar or two on here. So we're maintaining above the 10. I'm going to expand this so you can see this a little better. This is one of those squeeze jobs too. I've talked a lot about when this volatility gets down, the market grid starts to collapse. You start to see some interesting things there. So let's just run a couple bars here. I'm trying to just run it long enough to get one bar. There's one. Okay, so what's happening is we're looking at the PPMs are starting to roll over. We should get into about another hour or two as we come into London, and we'll start to see this deterioration start to come into play. And a couple things that happen, I want to show you, blow this up just a little bit so you can see it. Now the WaveTech fib target tool was projecting down to 4108 last night. Now we're still not quite there on an intraday basis right now, but let's go ahead and run just a couple. I want you to see this because I think this was significant. So we're coming in right into I'm going to speed this up a little bit. It doesn't seem to be running at all. There we go. So we're coming in. We're still climbing above the 10. And as we get into around that 3 o'clock hour, we're 2 now, we're going to start to see the algos are going to start to project down into the U.S. Open. We're projecting down into some lower prices. And you can see here we go. This was right after the Open. Right here it was 6 a.m., which is 9 a.m. And then we saw plenty of selling coming in off of the Open. So let me just put this back here, see if we can run this just a couple more moments here. I'm going to let it run through. You'll see that all of a sudden all the algos are pointing down. It was only a couple hours, but you can see that this decline was being projected out of this range around 6 a.m. this morning, which is 9 right before the Open. So we got a lot of declines. You can see the projected SMAs are continuing to decline here. But we look at the algos, and the algos are flattening out, but the bad thing is that they're flattening out at a 1.21, and anything under 0.25 is a downtrend. So while we're likely to, this is real time we're looking at right now, it looks like we're going to stall out as far as momentum. And typically what will happen once momentum stalls out, and I'm going to draw a couple of things in here. So I'm going to do a little education to start off today. And we'll take this in, and what we'll see here is typically what will happen, and we'll get to hang out and watch, is that we'll start to see the market stabilize and ultimately move into this pattern. We've only got 2 hours, but this is typically, this angle of attack down is going to be substantial resistance. The indicators are showing that we're flattening out from acceleration, but we're still down big numbers. So over here, ppm2 minus 0.37, ppm1 1.17, and then we're also looking at ppm3 at a minus 0.28. So everything here, all of these angle of attacks, all these moving averages are in a downtrend. So we're not seeing any type of bottoming formation here. We may see what happens is the markets will get a little bit of out of balance when they get this far away from the 10-period moving average. So it's going to try to draw back in, I would suspect, as we come into the close here. So let's go ahead, and I just wanted to bring in that perspective. So those of you, quite a few of you have the indicator, so you understand. Now we had, there's a couple things here. I'm just trying to draw this down. Right as this arrow is breaking down here, we were getting we're getting second derivative crossover, suggesting we're going to get acceleration. The algos were projecting, you saw a minute ago, everything was projecting this downward surge. So we ended up getting it for sure. So let's go over to, I'm going to set up 2 more charts here, and we'll do some intraday stuff, and then we'll get into maybe talking about some other things. I'll open up some question Q&A kind of stuff, and we'll just see where things get. Now this is a 5-minute, and this is the 1 minute. I'm just going to switch these around. So 1 minute while I was talking, was suggesting we're going to see some upside. We should come up into this 40-period moving average, which we did, 41.15, last trade 14. So we're right in there. I want to look at one other thing here. Let's go over to the daily for just a minute, so we can get the perspective of what the market grid is. And market grid 4110 was S3. We got down to 1175, so we'll call it S3 hit, and R1 was 53, R2 65. It's perfect rejection if you folks have these indicators. So we're looking at 41. The R3, let me see here. Yeah, R2 was 41.6542. Got a rejection off of that, basically high today, 64.50. And we had, think about what was going on then. The algos were on the hourly were suggesting we're going to roll over. If you had the 5 and 1, I was doing some trading this morning. I'm telling you, they all lined up. There was pretty good sells. We traded down to like 34, bounced a little bit, and ultimately the expectation was at least to head down to R2, which was 41.23. It did that. And then, of course, we went all the way to R3 by the time this thing got done. Now, this is the daily. What's interesting about this pattern, I've been talking about for days. Let me blow this up so you can see. You can see the dotted white line is the projection of SMA 10 based off of the PPM algorithm. So this is using the auto regression math here, and it's just continuing to show this is going down. And this has been the case. If you've been watching the channel for a while, this has been a projection for multiple days that we're just going to be heading down toward this staying below the 10-period moving average. Now, there's 3 Fibonacci targets down here, 40.76. I talked about this the other night. You'll see them over on the far right-hand corner. I tried to make these numbers a bit bigger here, but you're looking at right now 40.76, 40.27, 39.96. And that's actually a move, projecting a move down to 39.90, which is the 200-day moving average. So there is still some downside risk in this market. The only good thing that's happening that could change this is that the algos are suggesting on Monday we're going to start to decelerate a little bit and actually see the 10-period moving average try to turn up again. But right now, the forecast going forward, there's a little blip in this line. It looks like it will continue to decline down. Maybe fib target 1 is probably the ultimate target, which is 40.76. So we're not far from, we're 25 handles from there right now. So that very easily could be printed. So, but that's how the dailies are setting up at the moment. So I want to go back. We're going back to a 5-minute chart, and 5 minutes showing that we should start to test the 21 and potentially test the 40. So we should move up, just like I was showing you on that hourly. We got so far down, we should start to move back up toward that hourly average. And that number, like I said, is probably around 24 to 34 range. As we go through the next couple hours, we'll be able to kind of home that in. But I wanted to do some intraday stuff before things go. But yeah, so downside range right now is potential for, like I said, when we were looking at the dailies, going back down to 40.75, maybe there's some more. We could even see a 39 handle. There's not a lot to be excited about on the planet. And in a little bit, we'll go through, and I'm working on a new strategy. I think when these banks turn around, there's going to be a pretty good trade there. And it's not yet, but I'll cover that in a little bit. And that also brings up potential Russell trade as well. So we'll watch for that, as it's not now. But this is a 5-minute chart, and the 1 minute, as I was showing you, 1 minute is starting to peak out already. So we're coming right into that 17. Still looking for 24.35. You can see the upward slope here. So we'll see how this thing trades out. You can see the 5 minute still got some acceleration. We got a minute 33 to the 5 minute comes out. So what I'll do is let's just hang out and talk a few minutes. Let's watch this chart and see what happens when we get the update. The algos right now are projecting kind of flat, but we're actually through the first and second derivatives, suggesting that we're probably heading toward that 40-period moving average. Right now, that's 41.22. Last trade 18.75. So just look for that to be basically the pattern that we're going to watch here. So a couple things that I don't get a chance to do live markets with you folks very often, but the point of looking at the markets this way for day trading, you use a 1, 5, and the hourly with the algos to determine market direction. The hourly is very good at determining market direction. We also look for some sort of extreme deviation from the moving averages on the hourly. That's what I was talking about. We've got that. So unfortunately, the way things set up, if we were trading, we would be long this market right now. And we're looking at now last trade 1925. So we're trying to move up in toward that 22, 24. We should get a little mini reaction from there, some kind of rejection, and then there might be a pretty good trade setup. So we'll continue to kind of hang there. So we went 19. We got the update just a second ago, immediately printed back to 16 almost instantly there. So we're 1650. So this is the rejection I was talking about here. We'll get back. We should stay within the market grid on the 5. Let's take a look at the 1. See, like I said, the 1 is, this is the 5. This is the 1 we were looking at. So the 1 got this rejection already, and now we're right back into the moving averages. But if you look at the algos, they're setting up in a way that we're probably going to waffle along this sideways zone. And so I'm bouncing around a lot here. Hourly chart is turned green, still trying to move up. Like I said, all we're trying to do is normalize this. Where are we at here on the hourly? We're 30 minutes away from hourly close. Once we get the hourly close, a couple things we look for is looking for a turn up in the market grid. And if we can just get it to tick up and we start to form some kind of upward channel, that'll confirm that we're going to head toward at least the 10-period moving average as it's coming down, whether it can get much into it. Just a quick comment here from the standpoint of what we've been doing, which is a terrible sideways choppy range. Last week, as I mentioned, we went out at 41.51. We're right now at 14, so we're coming back in. This is that little rejection I was talking about. So the 14 level, let me go back to the 1 so we can see that. Here we are right back. 1 is actually suggesting we're going to come back in even more. We'll see how this thing sets up here. There's some support right here at the 21.14 is support. So if we can hold this level right here, well, it's really simple if you have these, and I like using a 1, a 5, and an hourly just to set this up. So we're looking at this is a 1-minute graph here. It looks like we're going to try to hold the line here for a minute. So we're going to stay within the 21. We're back at 16 handle, 1675. So we're looking at this thing just kind of waffling in here. Yeah, someone's asking if I trade the NQ. I don't. It's ridiculously in. If you try to trade any size in there, I'm trying to think here. Let me just see if I can bring something up here real quick. I'm going to show you what the NQ looks like, just to answer that question real quick. It is crazy. If you watch the S&P minis trade, you've got really highly liquid. You got 112 by 80. You've got good solid. In the order book, it's very full, and you can depend on it to some level. There's enough sellers. You can kind of see where your risk is in the order book. And in the NASDAQ, let me put up the NQs up here, and you'll see it's just ridiculous. So you can see there's literally no liquidity, and you're bouncing around. If you watch the order book over here, you'll just see there's 1 or 2, 4 contracts. It's really difficult. I'm a scalper by trade, so I need lots of liquidity. There is none here. Just the ranges that you see, just try to quote, we're 28, we'll trade probably, look, we 28 down to 27. It's just all over the board. These are, the charts look fairly good, but trying to get executed on any type of size is really, really tough. I mean, you get 10 and 12 contracts. It's not a good day trading platform. Not that you can't find some swing trades intraday, but scalping and doing the type of techniques that I like to do, there's no way for you to use this contract. You can see it's fairly erratic. We're 27, now we're 3 handles higher, 31.50, 32. Yeah, look at this. So, but let's go back and put the ESs up there. Now all of a sudden you'll see a lot of liquidity, back and forth trading on bid ask. From where I come from in the trading floors, what you want is you want to be able to see, what's around you. And these bars down here, these liquidity bars, let me get out of the way here real quick here. The liquidity bars are really important to watch down here. You can kind of see on both sides of the market where there's bids and offers. You're kind of going to hit some kind of wall back and forth within those areas, so you have a better feel for what type of risk that you're taking on. Yeah, and that's, I mean, like I said, finding good NASDAQ swing trades, that's a whole different program, but it's still very difficult, and you really can't trade any size. I don't know any like really large traders that are in there at least trying to scalp. That's the S&P is just so good at for liquidity and everything. If you look at the order book right now, there's between 1725 and 12. There's almost 1,000 contracts aside here. Now they could disappear very easily, but that's why you get so much stability in the way that the market goes. And you'll see on big trading days, so I guess we're still in educational mode. On big trading days here, what you'll see is, let's say if we had a big up or big down day, liquidity dries up. It ends up almost looking like the NASDAQ from that standpoint, because what will happen is all of a sudden the offers thin out. Right now it's awesome. You'll see also there's nothing really standing out right now. This is pretty quiet market as we sit here. A lot of times you'll see on the even money, you'll see some big offers or big bids. This is really as normal as it gets. But this is the order book. Over here is time and sales. So you can see what kind of blocks. Typically, when you see these all green blocks and blue, those are one order. That's how they're being filled. It's a big block order. And there's a couple things. We'll watch the order book. We'll just keep doing. Yeah, just keep watching. Yeah, I mean, I just see some chatter going on here between David and a couple of folks in JB. Yeah, if you're making money, you're making money. That's the point of this stuff. The way I do it is different from anyone else. We just saw like an air pocket there where we just dropped down to 14 bid, fairly big order if you watch these blocks. But probably should spend, and it'd be kind of fun thing to do, is to have like maybe an hour or so just watching the order book on a reasonable day and explaining what's going on within the order book, within time and sales. There's a couple events you can actually see. The algos are almost not present right now. This is just back and forth trade. These are actually probably humans trading. So when the algos get involved, then you'll know, and I would be able to point those out. Yeah, so hey, listen, we got almost a couple hundred of us hanging out. Let's stay with this. We got a long time to hang out. We're starting to print down toward the lows, so that expectation of that little bounce is fading again. There's some pretty heavy selling. I suspect for whatever reason, people are scoring up the books. We're now 3 ticks off the lows. So, but yeah, let's just stay with this order book. There, like I said, there is right at the moment, there is nothing substantial hitting it. It'd be interesting to see if we were to print a new low. We have R3. It's interesting. I should have wrote these numbers down and I didn't. So let me bring up, just before something happens here for a second, let's just bring up. So these numbers are a little different. We're looking at 12 even and 4101. I'm gonna bring up the Yeah, 41 even. So these numbers are slightly different. 4101 trade station, trading view, 41 even as STX, and then S3 is 10 and change, 1080, 1064 versus 12. I'll have to go over here real quick. Versus versus 12 even. So we're trading right on S3 right now. So let's go back to the order book here. I just wanted to get a couple of these numbers. So we're trying to press the lows here again. Yeah, so you guys should be, this right here is not, yeah, this should be full screen. This is good. I'll make sure I watch some of that. So another little test here. We did print down 1175. Here's 305 to buy at 12 even. This is what we start to see. It's kind of interesting. 14 is only 100. So the bids down here, 329, 130, 202 down here at the low, 262, 401 at 11 even. So there's a pretty big bid underneath this market right now. We're back to 14, just like that. Here we are, 15, 20. So we're coming back pretty good. I'll tell you what I'm going to do, and I used to do this in the live room. So let's set this up real quick. Let's set it up so we can see both. So we have the algos working. Now the 1 minute algo is suggesting we're going to get a rally here. So that was a retest. We came down into some fib targets. 1250, 1040 was the downward 2 target here. So we held right into that range. 1 minute is suggesting we're going to rally up. So let's take a look at this. 5 minute, we have now Fibonacci targets up above 26, 31, and 36. So this is exactly what I was setting up for off the hourly chart. So we retested the lows. They went fishing for some stops, couldn't find them. And so 5 minutes, slightly positive, but we do have these fib targets coming up here. So we'll take a look here. I'm going to go back to the one. One is suggesting we should get above all three averages. They've actually all virtually the same, 14, 15, and so 41, 14, 55, 41, 55, 53, 41, 15.01. So all of the averages are basically the same. So a break over 1550, you get a little bit of a surge. That's what the 1 minute suggesting we get. We'll see what type of action we get. Probably head up toward the 200 on the 1 minute, and that would put us up in that 22, 24 range that I was talking about earlier. Yeah, no, the live room's not back on, but we're doing a version of that right now. I guess I kind of just randomly fell into this, but this might be fun for some folks that are interested in understanding intraday trading. Order book, like I said, it filled up big time. We had huge bids down there at that 12 handle. It was pretty monster bid, probably 1,000 contracts to buy down there. And we're pretty, what you want to look at, just reading the order books, is you want to see if there's normalcy above on the offers versus the bids. Everything's like 120, 130 up here, 118, 130, 150. So no real imbalances. This is a pretty normal market. Look at this, 1650, folks. This is the algorithm just opened on the 1 minute. You can see we just got an update. And what we're seeing here is more potential upside. Maybe we head up towards this 200. So we traded down to 12, four-handle range, not a big deal, but we are seeing a little bit of a bid emerging here. We look at the 5 minute. We're coming into the 21 period moving average 17. Here we are, 1750. And we've got these targets up here on the 5 at 25, minimum 25. We look at the fib targets a little closer, 26, 41, 26, 31, 34. So this is basically this pattern being projected on the upside. Algos are kind of going with it at the moment, back to the one. And just keep watching the order book, see what's out there. Looks pretty typical right now. Fair amount of resistance, 1750. You can see the sellers can go around that area. On the downside, 15, probably 1525 is your downside right now. Actually, just for the record, I missed the live room a lot. Just no time. I happen to be, like I said, rebuilding the trading room, the whole bit. So there's a complete rebuild going down. Okay, so we're about to get an update here on the one. It says we're going to turn back up. We'll see what kind of. If you watch this area right here, let me see if I can get it up before it happens. I didn't make it, but I'll draw it in anyway. So right here, what we're looking at is the PPMs. You can see is basically wants to expand just a little bit bigger. There's something else that happened here. You can see there's some green dots in here, and I have to take this off to be able to. It puts a layer on top of the screen, so I can't control the back screen. But it looks like we got a little downtick coming here, coming back into the averages, and we should attempt another run. Right here, the PPM2 is a minute away from turning up ppm3 around the same zone. And all that's telling you is, let me get a pencil to draw, is what that's telling you is these moving averages are trying to do this, trying to round up. So we just got an update here, and it didn't go, it went flat, but it actually expanded a little bit. Let me get rid of all this junk here. So if I expand this up, you'll see there's some new fib targets that came in right here, and they are a really tight configuration, and we're looking at 16 even, 1750, 1847. So market's trying to move back into that range. I still think we see the 200, 21, 24. It was interesting. There was a big red block. I wish I could go back and replay the trade station. But we got a big block of sellers come in. It was an algo seller came in just now and hammered the bid from 17. That's the first I've seen the algos show up. Let me just bring this over. That was the first block that caught my eye. You'll see bright red. That's sellers coming in and they're hammering the bid. If you see a fluorescent green, that is the algos coming in on the buy side. So we got that little blip. They went away immediately. Here we are back at 1725. Now the 1 minute is suggesting on ppm1 that we're going to stall out a little bit here, and we're right. We did hit almost Fibonacci 2, 1750, and let me just get that there, 1725. So still got some upside here though, folks. I still think we see 22 to 24 heading up toward this 200 period moving average, going to 5 minute chart here. We still have these fib targets at 41.25 min. And it looks like we've got a shot here at keeping some positive, but this downward slope here, I'm going to expand things. You can see how the 40 period moving average is coming down. The theory behind the angle of attack is when it's at a certain decline level, the probabilities are less that it can get above that value. So right now that's 41.20, 21 area is going to be somewhat of a ceiling. We're printing 19s. So I didn't. So here we are at 18, 19. There's still a few sellers coming in here. So yeah, if you watch this stuff really closely, it looks like this is the 5 minute. We're trying to stall out right here. And I think it's appropriate, but we have these, like I said, the upward projections right now. The fib targets are 26, 31, 34. Okay, so we'll just stay with this. This might get to be fun. But there's going to be some resistance. Could see a little rejection around 2021 if we print up there. There's some sellers hanging around here. But look at the order book again, folks. It's very normal. It's what I call a full liquid order book. So here's 19 and a quarters. Yeah, they took those out. Now we're small. This is an intermediate bid. Now we're 50s again. And it looks like they're trying to trade 75.20 if we can get up here. Few sellers still coming in and they'll knock this bid down. So right now, but this order book is just full here. This is how you want to see it. This is a normal type book as far as it looks. We don't have any big players out there. Nobody's pushing. Sometimes these are just flash orders and somebody will put in 300 or 400 and blast them off. But so we're seeing here on a little bit of rejection. What did we print up to? What was the high here? Yeah, 1950. So almost to that 20 handle. But check out let me expand this out a little bit. If you check out the market grid, is turned up here a little bit. We're looking at market grid 1970, 20 even. Okay, we're sitting here right now at 1850, 1950 high. R3 was 41.19. So this is a 5-minute chart. So it looks like we're trying to form a channel to the upside. Maybe we're trying to seek out that 25 handle on the upside. And that, I'm going to go back to hourly. We haven't looked at that for a while. Hourly wants to get back up here. And like I said, we're what now? We're 5 minutes and 45 seconds away from the next hourly update. So we'll continue to watch this. Just play this out. So this will be a good educational session here. Back to the one. Look at this, man. This thing just, okay, the one is trying to turn around right here. So we got a downtick on the one. We printed up to 20 even. That was kind of 21 target. The upward slope of the, notice the upward slope of this white dotted line. That is the projection for the 10. We should hold above that. There is a trick. If you're using the indicators, you have to, right now it's 0.54. You have to remove the 0 on intraday. But we're still got a really solid upside bid here. Here's 2025. Order book looks the same. Look at it. Here's 21. So I kind of walked you through the analysis because when we were down at, when we reprinted at 12, all of a sudden it became fairly obvious that we should come up and try to work toward this, up toward this average. And we're getting this close here, 4 minutes and 23 seconds. Look at this. Here we are at the 200 on the one. It was very predictable. Everything was swinging this way, but you can see there's still more. It looks like we're going to get through this. Maybe we print the 25 men. So somebody's asking, what are the vertical bars on the left? These are the number of contracts on the bid ask. And if I were to bring this down, you'd see like right now, it's showing 52. It's showing all the contracts. So it's changing as the bid ask change. So one side is the offer, the other side is the bid. So you can kind of see, and the two middle ones are the closest bid ask together, and they're in 5-point increments. So we got right to that 200. Check it out. 4020.96 high, 41 even. So we should climb along this line, but you can see the algos are now suggesting that we should stall out around here. But we need this is the 1 minute. If we go to the 5 minutes, okay, we still have a positive slope here, but we could come back easily back to this 21.17 or so. We're already doing it as I'm talking about. But that was a pretty reasonable target up at that 20 level. So there on a day trade, there was anywhere, depending on how well you executed, between a 4 and 8 handles. So you can see we're getting a bit of rejection, but this is what the 1 minute is already telling us. We're going to reject back to the 10. We've done that. There's a reasonable amount of upslope. We should hold this 10 value right now, 1850 round numbers. We should be able to hold this, maybe bounce back just a little bit. There we go, 20, 25. Yeah, so that was your support right there. We just got an update here. So you can see this upward slope on the 10 is still valid. Here we are back at 20. We just got the market grid to turn up on the update, and we still have an upward slope 10. So let's see if we can get through that. If we get through the 200, then we're going to run to 25. We're going to go over to the 5-minute chart then. Here's 21. Let's go over and take a look at the 5. So the 5 is right on that 40 line. The 40 is still down slightly, but not enough. We should see everything start to turn around here. There's 21. Fib targets up here, I was pointing out, is 26 even. got rejected right off of that 40 line. There's still a pretty good downslope. So this is, you've heard me talk about this in the nighttime videos, that we get sandwiched between now the 21 and 40. Right now, those values are the moment 17 and 20. That's your resistance point. The algos on a 5 are suggesting that we still have another push to the upside if we can hold this 21 period moving average. If we trade through that, we go all the way back to the 10. But that was a decent move anyway, like I said, up to that 2021 handle. All right, let's watch this. Algos are still positive, back to 2025. We held the 21 here on the 5. These are support resistance right now. This is right now 2077, 1790, so 1821. We're stuck in that range. Now this is really nice because this is like a normal market. It's not being driven by algos. So this is like normal human being trading without the algos. We have seen a couple times where they've come in with some blocks of trade. For the most, we just got a new Fibonacci target here, folks. This is on the 5 minute. Okay. On the update, we now have fib targets. So the old targets up here at 25 have been negated. Now there's a new one, 19, 22, 24. That's your target. You still have this down sloping 21. You still should be sandwiched between 21, 40, even throw the 10 in there because they're all very similar. 1685, 18, so 16, we'll call it 16, 7, I'll get this right, 18 to 1650 is your support. We're getting a little bit of pullback in here, but we should stay sandwiched in here. We do have some new fib targets. Fib target 1 was 19, already been hit. So here we are right back to the 21. I give a shout out to Bill. Nice talking with you yesterday. Yeah, so we're just sandwiched here, folks. I'm telling you, this is just watching. It looks like if we take a look and we see what these indicators are doing, we're seeing that PPM1 is about to peak out, but we still have. We've got to get this PPM3, which is tracking the 40, we need it to show that it's going to turn up. And it's saying that at 10 after the hour, in 8 minutes, we should start to see some acceleration if we don't just do it now. So we still have targets 22, 24 right now on the fibs. And I forgot to pay attention, but let's take a look here. This is the hourly chart I was showing you earlier. So we got the big reversal bar. So we got a reversal. We made a new low from the previous hour. We closed higher. Now we're getting some follow through. Here's 22. This easily could print 28.30 here, folks. Just like I said, the market wants to get back. Let's look at the market grid here on the hourly. It's over here on the far right. It's fairly small. I'll read it off. So 23 is R1, R2 is 28, R3 32. So, and this is hourly, right? So look for 20. If we get through 23.95, we'll round it 24 even. Break above that, then you're probably looking at 28 to 32 on the upside in the next hour. So let's go back to the 5. Look at that 5, nice reversal. Did we get one here? Hang on. Now we got a little mini RXT sell signal. Notice it here on the 1 minute, we're starting to see the algo starting to stall here again. So we're not getting, a lot of times what you'll see if there's a breakout pattern happening, you should see everything starting to accelerate and indicate that we're going to accelerate going forward. And we're not seeing that. So we're back to the 10 period moving average here, which on the 1 minute is 41.20.27. Last trade 41.20.50. So we're right back into that range right now. So we should hold along this line. You can see the momentum is flattening a little bit, on starting to show some potential weakness on the 21. So we have a little downside after printing. We got that big bar. There's a little downside here on, this is the 1 minute. So let's go to the 5. 5's got an outside reversal. We're still printing these numbers, right? So 2271, 2455 is the fib targets here. So we printed 2150. So we basically have almost satisfied fib target 2. This is a little bit of an issue. You can see we're starting to, I'll blow this up and bring this over a little bit so you can see it. You see the moving averages are starting to cross, or projected to be crossing over. This is typically a potential move. This is the 1 minute that we're going to get some kind of upward slope along this 10 period moving average. Yeah, this is 5 minutes. That is 1. The 5 minute. So we're looking at just kind of hovering in here, setting up some kind of consolidation. The 10 period moving average is going to be what I call the demand line. So there's going to be support there. There's going to be demand. There's going to be buyers along that line. And we should see that once again. Let me just see where those numbers are. 18. Yeah, I mean, like I said, the order book, this is as normal as it gets. This is kind of cool to see this set up. Yeah, so still fairly stable. We're at least trading above all the moving averages now. Things are being projected to actually get better. And I'm going back over all the way back to the hourly chart. I said, the market's so out of balance here. We're probably 2 standard deviations from this moving average, and it wants to come back toward this average. It is declining. So we've got, let's see what it's declining at. It's not much. It's only $1.50 per hour. So, but we still should try to get ultimately 28.32 is still a possibility here on the hourly chart. And we also have, if you've been around the channel a bit, this is classic. It looks like we're forming a bubble bottom here. So most likely we've seen the low of the day, which was 1175. So we're 11 handles off the lows. Going back to here's the 1 minute. 1 minute's trying to turn back up a little bit, but really all we're doing, as I was talking about, if we go back 4 or 5 minutes ago, we just got an update here. You can see this 10 period moving average is that short-term demand line. There's good support here. We bounced right off of it here. The low was 20.25. The average was 20.22. So we bounced right off of that. And the beauty of having the PPMs, understanding the probabilities of what's likely to happen when you get into trend mode, like I said, on PPM1, if you're intraday, it's 0.72 up right now. There's only about a 10% probability to decline below this 10 period moving average. Here we are, 23. These are new highs on this move. So moving towards 24, 25, probably up to 28.32 is where we're heading. Yeah, I hope you folks are enjoying this because this is kind of an intraday trading type. I'm just walking you through it. The patterns here. Here's 23. You recall probably better part of an hour ago, we were talking when the market was 12, 14, that at least it'll get to 24, possibly getting up as high as maybe 38 here, which guess what? We're 51 closed last week. We're down a couple handles from the standpoint. Let's do this. It's a final hour here. So let's do this for a few more minutes and then let's just break out and talk about some other stuff. So I just wanted to give you folks some insight on what it's like to look at these different algos and the wave tech stuff and how it can be used and what the thought process is. Once you get this, it's incredible because you have a really good feel for what is likely to happen, especially on a normal day like today where we don't have crazy volatility algorithms and illiquidity. And that's one of the things that is nice to have on this from the standpoint of understanding the order book and having this viewpoint. You can do this. And by the way, if you use TradeStation and you use TradingView, you can actually bring this order book into TradingView. I've never used it. I can't link those two accounts together, but if you can, it's pretty helpful in understanding things. Now, what do I got up here? I got the 1 minute. 1 minute is what? It's just updated just now. So we got the market grid to turn back up. What time is it? Do 4 more. Let's do it to the next 5-minute update, and then we'll diverge into some other stuff. Yeah, so just taking a look here, still kind of hanging. Look how we're just trading along this line. We're trading back at the 1 minute right now, back to this 10-period moving average. And the 10 is starting to suggest that it's going to try to break down toward the 21. The 21 value right now is 2015. We're starting to get a little dicey here. We still should hold it for at least another maybe 3-4 minutes. And we'll see, like I said, what the update looks like. Yeah, still holding this line, folks. Look at this. We had 10, 22, 22, low 22, 25. We're bouncing a little bit. What we want to see, though, is the market grid turn up on the next update. We're 27 seconds away. A TradingView shows you on the increment when your next update is here on the price in the green on the far right here, like 17 seconds out right now. Let's take a quick look at the 5 minute. So 5 minutes still climbing. It's still, while it's showing it's starting to back off a little bit. Yeah, so here we go. Look at this. We got the update. We crossed the first second derivative. Now it says we're going to 21. We should head right towards this 21 even, 2250 print. Still trying to hold it a little bit. But this is what the algos are telling us, that we should get some weakening here. And here we go, trying to trade it down. We should see some weakening. All PPM 1 and 2 are starting to show weakness. We should at least come back and test this 20, what is it, level? 21 even, possibility of coming a little further back. We still have a downward sloping 200. That's going to draw us down. Here we are at 21 already. So this is what this was telling us this bar here was going to be the peak, and we're going to see it roll over. We printed the 21 already. So right now, the last period, this 1 minute was 21.25 was the low, 20 2122.25. So we printed just below it. There's still some downside here, folks. This thing's going to pull back, probably back to the 200 at least at 20 even. Now here's 75.20. It's just heading right there. There's 20. There it goes. Could print as far back as the 1850 level. We should start to hold right around in here. This is also our 2033 was STX here. So let's see if we can get any kind of bounce here. But this is exactly what the algos are telling us, that we're going to weaken here. So we stalled out. What do we get in the print level? We got 2375. So 24 was the original target. Look what's happening. All of a sudden the 10 is rolling over. You see the angle of attack is rolling. We should challenge this 40, 1870, 1850. Looks like should be challenged. You're going to have resistance between 21 and 22 here on the upside. So here's 2150. So back to the 10. So now we're sandwiched 200 and the 10. That's going to be your range. So we've got all goes down. We've got everything set up here. So the 200 is right now 19, we'll call it 20 even. On the upside, the 10 is 22. So we're probably sandwiched right here at the moment. And the algos are continuing to suggest a little downward pressure. You can see how these are the dotted lines are is the prediction based on the PPMs and what's going on here. So you can see everything's kind of leaning down. We have the one positive in this pattern. I'm going to draw this in real quick since we're still in educational mode here. So if you notice here, this 21 period moving average, let me get rid of that. Let's do this. This average here, I've drawn a line over it. The reason why I don't like trend lines necessarily is that the moving averages are perfect. So you see we have that up, that 40 is actually drawing the trend line you need to pay attention to. And now what we've got coming over here is this is basically, we're trying to break out of this pattern here, but we should stay back in, and I'm just draw in a couple things here. We should see these markets stay in this sandwich. So while I talk about I don't like the wedges and drawing those trend lines, those things get drawn by the markets if you let them. And this is the entire thing that I talk about a lot is you can see how we're coming back into here. We still have an upward slope 21. We should come back in and stay within this wedge. But where did this wedge come from? It came from the moving averages. So these are patterns, and then we have a secondary pattern. So the reason why I like moving averages and simple moving averages is that they help to guide this, and along with these guys down here, they can give you a lot of insight. Now we're on a 1 minute chart we're looking at right now. So what we need to do always is to remember that we need to check the other ranges. So we look at the 5. Look, so this was perfect. Okay, we came down to this rising 10 on the 5. So if you're looking at a short-term chart and you're going, you need to pay attention to that 5 minutes. So the upward slope, this is actually still a very bullish pattern here. So we still have that upward bias, but we're still trading 22.18. Now we're starting to try to move out of it a little bit. And we get this feel by going back to this 21. You can see it's starting to stabilize now. It'll be interesting to see what happens. But going back to the 5, you can clearly see everything. Look at the nice trend line that's being drawn there. And we came right almost down to it. The 1897 was the 40 on the 1 and on the 1 minute graphs. And here we are back at 23 again. What we need here, what do we got? 22 seconds. Let's stay with this chart. I'm sorry, I'm having a hard time breaking away from this. But we should see the market grid turn up. If we do, it's possible we might even get some new fib targets, something of that sort here. Here's 23, 25, 50 printed back to 23 even. There we go. Look at that. We did get the market grid to turn up. And now we're looking at 26, 27, R3. So this is where we start to move here, folks. And one of the things that I got so zeroed in on this 1 minute, is trying to show you folks every little wiggle and what it was predicting, is that you can see that the PPMs are up big numbers. This is 1.5 on this angle of attack here. This is a huge upward trend. So we're going to climb this line, I would suspect, right into close. We'll see if we can print up. Like I said, this is back to that 24 prediction that was made over an hour ago. And whether we can print up to 32 plus, we'll see. But it takes a lot of time here, folks. I'll just come back on screen here for a minute. It takes a lot of focus to be able to trade like this. And typically what I'll do is I'll have the 1 minute, the 5 minute, everything on the screen so you can keep this perspective. For this purpose, just to keep the charts big enough so that you can see what I'm doing. I'm just flopping back and forth. But the best panel, like my new trading setup, has 6 heads, and I'll have a whole bunch of stuff set up on different screens so I have that viewpoint. But if you're trading indexes, you're trading intraday like this, if you keep this perspective, this is what some of the techniques that you can use. I wish I had, yeah, I'm just looking to see. Yeah, I see somebody talking about the debt limit. Yeah, anyway, but you can see that this angle here on this chart, that's a nice trend line. And I started writing an article. Maybe I should go back and try to finish it. Why I hate trend lines, because I draw them, and these moving averages do much better job at drawing lines than you and I do. But the expectations with the combination of the PPMs. Listen, I've been doing this a long time. This concept came out in 1984. No pun intended. It really did. Was 1984. When I was working on this stuff with an associate. And all we were trying to do is figure out what probabilities were on everything, right? So I guess I have to finish off with what I did with you folks today. It was kind of somewhat random, I guess we'll say, from the standpoint of what's going on. But let me see if I can bring up something. Yeah, so I'll just bring this up real quick here so you can see it. Let me get off screen. Let me do this. So this is a probability graph on these PPMs, and this terminal value, this is a typical move. The TV stands for terminal, and then the PPMs will get to a point where they start to get the angle of attack, and then they'll climb down. But what happens is once you get on this other scale, once you get above, this is 0.50. Once you get above this 0.75, then you get what's called an extended move. So it starts to tell you, based on the angle of the attack, that it's going to, best way to put this, see if I can get this to come up here. Let me go to this screen. There we go. That's a better screen. Once you get to that angle of attack and you get to a certain level, let's say 1% more on an angle, then what happens, it takes more, it's harder to bleed off that momentum and that angle. So you continue along that line for an extended period of time. There's an orange line in here that is actually a parabolic curve, and that's the scale on the far side. So 2.5 plus, you start to get into parabolic curve, and then that's where things are running vertically, and you've got this crazy thing going. And if you go on one of these big down, now these are invert all the numbers to negative on a downtrend, okay? But if you start to get into this type of pattern from the standpoint of when it's going up, that's the days that you get the big algos are trading the one, let's say 1.5 plus, maybe a 3, the 2% days up or down. These are the kind of numbers you start to see, and primarily you'll see this in a number of the hourly chart will show you these big moves. When you get to these numbers, then you start to understand that these things are going to extend. So let me walk through this. The green line is a typical evolution of how momentum goes. It kind of goes up and it doesn't go outside of normal parameters. So the angle gets to a level and it starts to roll off. We saw some of that going through this scenario I went through today. The next level is an extended move. We're actually seeing the extended move happen on the 5-minute chart right now. We'll see where we are when it come back. But so that's happening. And then at some stage if you go much above where they are, you get into the 2+ range, then you start to get into parabolic and you get these big short covering rallies or big sell-offs if you invert to a negative number. So this was a theory that, like I said, we developed back in, go back to, that's not where I want to be. Hang on. Let me get everything back up here. Bear with me a second. So we're continuing to climb along that line. Here's 24, still moving up on this line. So right now, it's interesting. PPM1 is 2.36. It's almost right at that where it starts to go to potential parabolic. And so we could see that 28.32 I talked about earlier. And this is a 5-minute graph, so it has a limited amount of life. Somebody, how do I remind you of Dennis Rodman? Okay, but anyway, so but this angle is really what it's all about. And I can tell you that just like everybody that's watching right now, it is very typical that, how can I say, we're all trying to figure out the same equation. When is the market trending and when it's not trending? And that's where we came in with these PPMs, understanding what are the trend mode, when is the angle of attack suggesting a trend, what's the probabilities of it continuing, what are all those things? Those are all questions you have to ask yourself. The beauty is I built WaveTech and Portfolio Expert, and I built all that stuff in there in Logic, right? So there's like 600 rules in those models. So there's a lot of considerations and different, what we call different conditions that happen. So we actually have in the Logic, if you were to see inside, it says, if condition 10 is true, then this. So once we identify some of these environments, then we put the trading rules in place that need to track that environment. And if condition 10 is no longer valid, then it goes back to another set of rules. So what we tried to do, and we used to joke that it was virtual Bob, is what we tried to map out, and what we did our very best of actually taking trades that we did way back in the 80s and mapped them out exactly, trades that were done perfectly, and went back and recreated those trades into Logic. And a lot of this stuff came out of around 1991, 92, when it became easier to program this stuff into some type of logic from that standpoint. All right, so let's we'll call the class over. Thank you. So we'll go there. What I'll do here, there's a question that Antonio's got up here. So how can we handle higher rates for longer, such high depth, and trade the biggest deficit? Yeah. So that's a good subject. Let's come back over to another screen here. Yeah. So this higher for longer. Listen, we're coming into a transitional phase here, and in the world actually, and we're coming out of the world of the Qs, QE, QT. We have to normalize this world. We have to come out of this. The Japan experiment was a failure, and they have some other issues. So we'll leave Japan out of the equation right now. And that's why you see, like I saw some statements from the ECB, our last interest rate rise wasn't the last one. They're going to continue to raise rates. And with the high debt number, that is an issue with the expanded amount of interest that has to be paid. There's a lot of elements there that have to be dealt with. But the reality is that we have to come out of this crazy world that Ben Bernanke and Paulson and all those guys put us in, the GFC. That was just, unfortunately, it's what they felt they had to do, and maybe it was the right thing. I'm pretty sure if AIG would have failed, we would have been still talking about being in a depression today. So, they've engineered us to here. Now they have to try to engineer us out of this. And I keep talking about something that, whether this is my view of the world, is that Powell told us that they were going to do this, and they're going to stick with it. And it's not just higher for longer. It's not forever, but I'm telling you, it's going to be potentially a decade from now. We could have the same conversation, and rates will be fluctuating based on market forces, not based on what the Fed is trying to manipulate the markets. I'm convinced they want out of that, and the whole world wants out of that. There's no way. I mean, look what they did to Europe. I mean, negative rates and all that. It was just ridiculous. I mean, there's bigger issues there. And guess what? When you have a legislature, you can make new laws, you can change the rules, you have a printing press, you can pretty much get away with anything. I mean, it's a giant Ponzi scheme, no doubt, but they want to unwind some of this stuff. Will they be able to do it? We'll find out. There's no way to predict it. I don't believe. I think I've talked about this before. To me, and trading and everything and analysis, it's like driving a car at night. You can only evaluate what you can see. And if you get too far in the future, then it's just total BS. And there's no way for you to make that analysis any accurate. You're just throwing darts and hoping you're lucky. I would tell you, I got real lucky, and I'm trying to think, in 2005, I did a long-term projection and called the highs in November of 2007, literally within 0.15 on the S&P. Total luck. It was a Fibonacci projection. I did a bunch of math, and that's how it played out. And people thought I was genius. And I did it. I try not to do a lot of that because I always say, well, it'd be nice. Are you really going to take a concept that you're looking at right now and say, I'm right, and I'm going to put all my bets on and follow that through? And maybe so. Warren Buffett really never did that. Warren Buffett was an individual stock investor, And, so he really was buying companies. Now he's just part of the mainstream. And going back to '08 and the GFC, the Goldman bonds and a bunch of deals that he got then. And there were some other things that he's been involved with going back almost 30 years ago. I've never really been a fan for a long time because it's really easy to make money if the government wants to guarantee your losses. So, but back on track here, I think you trade out what you can see, you evaluate the risk of what you're doing right now, what you can see, and that's how you trade. If you can tell me what the market's going to be in 2 years from now, great. It really doesn't mean anything to me because everything I've been doing for a very long time is walking, you folks see the database, all that stuff. All of that is telling me what the probabilities are for some period of time, whether they're 3 months or 6 months, is pretty much what the database will give me. And so I follow that. I look at the technicals. I cover the things that I think are important, and then you place your bets based on other probabilities. I'm one of the luckiest guys in the world. I follow 16,000 stocks exactly how I see the world. So the database and all of these events that I show you every night, these are all my models. So, I obviously even believe in them or I don't. But the other thing is they've been around for decades and they've done really good things, and they're not perfect, but they, generally speaking, keep you pointed in the right direction. That's all your job is. If you're a money manager, which we deal with a lot of them, all you're trying to do is keep pointed in the right direction. Last year we had heavy cash. We still have 35+% cash on average in most of our strategies. So we're not, foot on the floor trying to see how far we can push it. It's the contrary of that, And like I said before, we're looking here, 28.50, by the way. There's a 28.30, so they're pushing them up, like I said. The chart on the far right, I guess it is, that's the S&P 5 minutes. So you can see we're printing up some pretty good numbers here. I'm not sure where we got to. But anyway, just to kind of go down this rant a little further is, as far as the higher for longer, it's actually just higher. It's actually normalization. And I could go on for a little while here in that, talking about the sea changes, and there's incremental changes that happen virtually every decade. This one's, we'll call it 3 years late. It's not exactly on the decade. There are different times. 82, 83 was really a time when we saw these things. I won't go through the whole analysis, but we're seeing another shift in how the economy is going to be structured going forward. So talking to some folks in a multi-family environment, investments from apartment buildings, they have been able to roll money all the way up for the last 10, 15 years and quadruple 10 times their money in some cases. And that game is over. And not only is that game over, they close the league down. And that's what my scenario is talking about, is basically every type of structured deal, how you were evaluating risk, what you were doing, everything's changing with these higher yields. And it's not going to go away. So you're going to have to reorganize and do deals that make sense. Deals that don't make sense don't get done anymore. People are very creative, and the markets are very creative, and they'll find the next thing. Maybe we just continue in a long, moderate growth, and it takes 5 or 10 years to work through this. Wouldn't surprise me. Doesn't mean there's not going to be money to be made in the markets. It's just going to be different. It's not going to be the same. Everybody is expecting it to go back to how it was. It's not. I guess this is my viewpoint. It's not going to go back to how it was. It's going to be different. And it's not going to be necessarily a bad different. Everybody's projecting, the end of the world. I guess the Peter shifts and and others that are doomsayers are always out there. That's always the case. Even it's funny, even Ray Dalio, man, I used to respect Ray so much, and since he's stepped out of his day-to-day roles at, he's not the same guy. He's just become elitist and talking to us little people and telling us how we should do things. Unfortunately, he was much better when he didn't talk to anybody, when he didn't show his views, because I'm not sure, he's now like, I don't know, like grandpa trying to tell you, here's what you should be doing, you little people, you should be doing this and that. I've been around these markets a long time. Everything's dynamic. It's going to change. But you ask a loaded question, whoever asked that. But I appreciate it. So send me on a mini rant there for sure. Yeah, Harry Dent, exactly. That's who I was trying to think. Yeah. Like I said, trade what you can see and don't worry about the rest, okay? I have no idea what it's going to look like a year or two from now. I do know that it's going to be different than it was 2 years ago, and we're not going back to Ben Bernanke save the markets day. And it's interesting because everybody's been predicting this down market, and I'm looking here at right now 40-30. So here we're coming right in that 32 range. Let's take a look at something real quick here. All right. Let's take a look at this. Look at that angle, folks. It's still saying we're going to climb along. We got up to 32 even. 28.32 target. There we go. These old fib targets over here were absolutely right. Let's get where they were. They were 31.44, 34.81. Yeah, but look at this angle of attack here on this 5 minute. When we first came on, we were down here printing. We printed a new low when we came on, and it was really clear after that happened that we were going to print up 24. And I said 28.32. There might be a little more if we go over here to the hourly chart. Check it out. What were we talking about? Is it moving back toward this 10-period moving average? So all of that happened. And yeah, so Dave is going, I bet the ropes are in. Let's put the webs up. Probably not on this chart, but on this chart here. This is the 1 minute. Yeah, look at the 1 minute rode along that 10 as well. Once it started to get up, we're just riding. We're still got a bid out there. Trading 34 right now. But let's put the 5 minute up here. We'll go to the indicators, and I don't spend enough time really talking about these. I really don't. I want to look at the webs, and somebody call it, there's a rope. There is a rope. And these are linear regressions, but look at this, just steady bid here. We still have more to go. The PPMs are 2.6, so we're well into that extended mode. I'm just trying to find where we went. Yeah, right about where in this area right here. Let me get something to draw this in. What time we're getting to be, quarter till. Right in here. I'll draw a circle around this area, and I'll draw this right here. Right about in here is where this is that 2.5 1.5 plus extended pattern. So once we get to that level, this is extended pattern. And so look at these angle of attacks here. They're just solid from the standpoint of how this pattern is unfolding. This is a 5-minute chart, so the party ends here pretty quick. But the bottom line is that is the perfect pattern. Now, one of the things you could argue is we could get all the way back to 44 along this line, and but we don't have enough time. We got 15 minutes, but you'd want to seek out back to this 200 period moving average. So I want to, let's try to do something real quick. It's interesting. This 200 is an interesting thing to observe, because really what you're looking at. I'll bring up one more tool. When you get too far expanded under this line, the market, you can see we were above this line, we came to it, now we expanded down, and now we're trying to come back to this 200 period moving average. So it wants to seek this out, whether it gets all the way up here or not. This goes in line with the pattern I was talking about earlier on the hourly, where it wants to come back to that 10. Same thing here. This is just a 5-minute chart. We're seeing this, and then you see at some stage, it'll be by around the close, but we start to see something interesting where the moving average, let me get a different color, this 10 period moving average is trying to roll over, and ultimately you get some kind of crossovers with these, and then you get another pattern. So this is a 5-minute chart. This is pretty typical of how things go. But yeah, so you can see we're still getting upticks here on this pattern. Let me try to, so I got the webs on there. Webs are in a rope, so we got a solid rope going up, and we're trading along that ridge of that rope right now. Let me see if I can expand it so you can see that. So what we call rope is when all of these linear regressions get in a very tight pattern, and these represent how strong the trend is. You can see when we were going down, we had rope. It starts to widen out. We start to set up some kind of bottoming pattern. So here we're still getting up there. It looks like we're getting a little rejection here finally. Finally getting a little bar rejection here in the 5-minute. But it ran right to that. Look at that, 33 even. So 28, 34, 32 was original. So we printed all the way up 33 and change. Yeah, so a good question here. Somebody just came up with. Let me go back over here. Yeah, someone just asked a question about the what's the big trade 23, 20, 24. Sorry about that. Bear with me. Yeah, I'm just looking at some questions here, folks. Yeah, so I'm actually, believe it or not, this financial sector is getting hammered so bad that I'm kind of leaning toward building an ETF hack. I did a mini one. I'm going to put in more work into that, but I think the financials could be an interesting play just because they've just been hammering down. If you want to buy low, sell high, that's certainly an area that's going. Todd Trout, is that you, 10-minute rig? Trading stocks, is that who you are? By the way, those of you that know the Runa, this is FitAid. This is my new, you can't buy Runa anymore, it's gone. Yeah, I will put out a release. Here we are heading back up. We're looking at, let me get over here. Yeah, 30, coming back towards 33, 31 prints right now. What we got, we're coming into this final 10 minutes. We usually get some volatility to come in here right now. I'm just trying to see if there's any imbalances. Yeah, 222 million to sell side right now on for the close, the MOC. Yeah, I'm trying to find him, man. That was so much fun. I miss having you guys in the live room. I mean that. It's funny how somebody's Huawei P20 Huawei, probably one of the best laptops I've ever had was a Huawei, by the way. Yes, it will, Jay Ridden. That will be it will be the dotted prediction. There's some signals. There's a bunch of stuff. It's pretty cool package. So anxious to get it out there. Like I said, this weekend is rebuilding. I'm just looking around this studio, and everything's going to change. I got so much stuff coming on Monday here. It's just nuts. It will be a construction site. So I've talked to the people who are redoing this. We're going to tarp over the studio area where I'm at right now. Go from there. See what else is out there. Now, most of the time, Floyd Garage, you're right. It doesn't mean much. Yeah, don't use VREP. I use Bob Kendall's stuff. I don't do a lot of that. There's some good stuff out there, folks. I do what I've been doing for a long time. Somebody said earlier, it wouldn't change my trading strategy for because if it isn't broken, it's why change it. So no, I don't look at that stuff. Here we are getting a little bit of a bid here, 34.25 printing. So a little bid here on the close. We're looking at 35 even prints. Let's go over. Let's see if we can. Let me see if I can get this last few minutes. Let's bring up the level 2. Let's watch this last few minutes together. Yeah, so we printed 34.25 last. Looks like yeah, nice little reversal. But once again, if you look at this, that angle, it was all predicted. The algos called this perfectly. I tried to walk you through step by step. Yep. Yeah, everything I do is proprietary. I created my own trading systems. We started doing that back in the 80s when there was not a lot of technology. Here's 35.50, folks. They're catching a bid. 35.50 high here. Look at this, 650 printed. So we're getting some pretty good moves here. Order book is fairly full. You'll see it. Let me get off screen here. Order book's fairly full right now. 239 for sale at 37 even. But look at this nice big reversal. Back to 550, 5.25. Printed 650 high here. Coming right back at it. There's we're going to get some volatility here. We got about 5 minutes to go. This is another little lesson here, folks. If you do have, notice the increase of transaction volume that we're seeing right now. Very erratic, and it's trading much faster. This is very typical of a lot of times of an acceleration or a potential trend reversal type pattern. So far, we've printed 775 now. That's 30 plus handles off the lows. Here's 650. High 775, 625 low here for this 5-minute period. We just blew right through it again. Printed 37.75, so we printed a new high. Still getting a little acceleration. There's 300 for sale at 8 even. 328, 339. Next fairly large bid is 550 for 206, 289. So looks like we're probably, I would call this bid ask as we come into the final 4 minutes. We're looking at 35.50 to roughly 39 even. It could randomly move in here. Pretty impressive. We did get an RTX sell signal on the last 5-minute print. But, I mean, this angle of attack was perfect here, going back, whatever it was, an hour and a half ago. We printed these lows. Yeah, I mentioned somebody's asking something about Trump's view of the. Let's let this thing close up, and I'll cover that before we leave the session. Yeah, so now 775 still high print. 335 for sale at 38 even. They're about to trade them. Here we go. Actually, they dropped off. It was 375, now it's 156. We did print 38 even, so they got some of those. About 2.5 minutes to go. At 2:15 to go. Yep, 8 even high. Pretty impressive, folks. I hope you folks learned a fair amount from hanging out and watching how all the predictive allocations, everything is perfect. Hopefully, some of you caught this thing. Yeah, so we'll see how this thing closes up. I'll talk a little bit about some of these questions that are coming up. Yeah, folks, there's a current set of videos. We're calling it a mastermind. I would call it a Mastermind 101 on all the indicators so you know how to use them. And we are going to start these mastermind courses. Here's 38, trying to print through that. I just printed 38 even again. There's 300 for sale. Couldn't do it. But there is videos that you get along with everything to get you started and all that. And we are going to do some of these, what I call mastermind sessions, where we're going to do one for WaveTech, one for Portfolio Expert, and one for the indicators. And there's going to be new education coming out with the new indicator release. Okay, here's 825. 380 for sale at 50. They printed 50. 8 even, so that was pretty much it. We're in the final minute, folks. So we printed all the way to 825 back to 6 even. There you go. That's your close. But I would say that was a pretty impressive comeback on as far as things go. Let's go back over. Yeah, so yeah, folks, that was an impressive rally, I think. And guess what? We went out at 41.51 last Friday. We're 41. Well, we're not closed yet. 41.36.37. We'll see what they do up to the close of the futures, but this looks like another week, nothing happened. You know, we had some volatility. Yeah, I mean, okay. Yeah. I'll spend a couple more minutes. I have to look at this. Sorry for the I'm looking at this, and I've got to start dismantling. I have to box up everything. I have till Sunday to get everything cleared out, ready to start to tear this place down on Sunday. So anyway, yeah, pretty impressive. I see Bo. Bo, you've been asking questions for days, so maybe I can take a minute and let's take a look at those. And I have covered a fair amount of the daily indicators here, and we're really, I talked about this early. We're in this configuration here that is virtually impossible to read, with the exception of the moving averages are on a daily. S&P are being projected down. You see a little uptick being projected for the PPM1, but you can see the projection. It kind of rounds off a little bit. We're really just trading around the moving averages right now. PPM 10-period moving average 41.37, 41.45 on the 21, and 41.13 on the 40. So basically today we traded between basically all those averages, right? So we did print up to 64, and the low was 11.75. The averages were extreme 13 and 45, so we printed a little bit above. But in the end, we finish right smack in the middle. We're right here at 36. We're in between the 10-period is right at 41.37. So what's happening? The algos are all suggesting, especially that PPM 3 is starting to suggest that we're going to roll over. Like I've been talking, these fib targets on the downside look like a bit of probabilities of running down there is 40.76, 40.27. I mentioned these numbers heading toward the 200 before we get out of this range. If I go to weekly real quick, and I'll cover this on Sunday night for sure. Let me get rid of something here. Yeah, if we look at the weekly, still has that upward slope. So while the dailies are suggesting this is an interesting conflict, and I would go with the weeklies here, is that the downside, look at this, 10 period 4091. So we could print below that on a weekly basis, head down towards 76. We could get down to this 4047, which would be a move down to the 21. Last week's low was 4062. You remember that number. So we're just really if you go the last 3 weeks, we were 4068 to 4193. This last week we were 4206 to 4062, and this week was a very narrow inside bar, which has us at 73 to 11. We printed the low of the week was printed just a few minutes ago. Yeah, so I pretty much the coverage that I do every night is going to help you. I hope understand some of these, but when we're at this range, I was talking about this earlier, folks, is that we're in this range where we are just sandwiched. We're trendless. I mean, PPM1 is on a weekly is almost trend level. It is trend level on PPM2, so that's support. Support's down all the way down to 47. So when I talk about those Fibonacci, all this stuff kind of figures together, but the reality is we're just locked in a range. But we still have an upward slope here. You can see on the angle of attack here. It's not very much. It's kind of waffling around, but it's still got a slight upward move. Last week we traded just below it, closed back above it. This week we traded almost to it and finished on a little lower. And it's funny because I saw a news story is that the market is going to print lower for 2 weeks in a row. I mean, as you know, it is lower for 2 weeks in a row. That is true. But the news folks, financial news folks, are always struggling to create some kind of narrative, and sometimes they also have an agenda for whoever's running the editorial desk from the newsroom on a TV or CNBC, all that. Yeah, so somebody's talking about when the debt deal is announced, maybe it's kind of tough to play that kind of move. What I'm seeing here technically, and I talked about this, we're going to close down at this level, but if you try to do some reverse fundamentals, so we look at technicals right now, technicals are flat, slight bias to the upside, no real explosion, although there are some fib targets above the markets right now on the intermediate level. I'm just bringing these up real quick. We're looking at 42.59 and then 44.14 and 46.15. So those are legit upward targets. Maybe there's a debt ceiling issue. I'm not sure that means much, right? It just means we're not. Yeah, I'm not sure there's any effect there. I don't know what the effect is. So when I talk about doing reverse, let's say, for instance, right now we're getting massive projections to the upside and we're seeing acceleration in all the technicals, then I would ask them the question, what could cause this to be true, and see if there's anything out there we can find. You can make up anything in your mind, but right now it looks like we got a steady climb on the upside. We'll see what kind of numbers we get after the close and the reopen on Sunday night. So theoretically, I won't have any issues because I'm picturing the tent over the area where I'm sitting right now. So that will be protected. And so theoretically on Sunday night, barring some fumes in here, we'll be able to go. We're starting ripping everything down and painting. Maybe a little bit of an echo because all of my sound treatment's going to be off the walls as well. So like I said, lots happening here. Looking forward to everything that's going on. It's really exciting. And it's going to be about a 10-day 10-day cluster around here for sure. Just looking. Yeah, so go ahead and click the like. I hope you guys, it kind of came into kind of a live session. Hopefully some of you made some money off of this analysis, but it was perfect. We printed up all the way up to some of these numbers. The angle of attack was fun to go through again with you folks. And it was sort of we'll call it a live room session here on the internet. So anyway, folks, thanks again for watching. Have a great weekend. See you Sunday night. And like I said, hopefully there won't be anything weird going on here in the studio with the rebuild. So thank you again, and I appreciate everybody hanging out. We didn't have a lot of folks, but there'll be a fair amount of folks to rewatch this thing. Anyway, we'll talk to you soon. And don't forget, if you want the indicators, kendallreport.com/indicators. You can get them there. All right, folks, have a good weekend. We'll see you Sunday night. Yeah, so I'm talking away and you guys aren't hearing me. How funny. How funny is that? That's classic. I turned the mic off to end the show. So here's what I'm saying on the Trump thing. So this is key to understand. He said that GOP should just send the country into default, and Yellen's telling you that it's catastrophic, so you know that's not right. And what Trump is saying is that sooner or later you're going to default it. You've got to change the spending, and if this is the moment in time to do it, you do that. Go ahead and do it. And if they don't get the spending cuts, then just default. And if that happens, then maybe it's a big thing, maybe it's not a big thing. There'll probably be certainly an emotional reaction. Maybe it sets up another opportunity. Maybe that prints us down into that 39 handle I've been talking about. No one knows what that event means. But it was interesting that, and it's classic Trump, right? It was like, well, it might mean something, might not, but the point is, what it will do is force the hand of the Democrats to cut spending. And we know that has to happen. And all of everything that I talked about, the rant I went on earlier, talking about how we're going to change it, the structure of interest rates and how the economy works, that's certainly another part of it. We've got to stop spending money and we have to start figuring out how to reel this stuff in. It seems impossible. I mentioned this in my rant the other night that I did a article. I'll have to dig it out and see if it's worth republishing. Maybe I'll put it on. If it is, I'll put it out in on my Substack. But the reality is, I've been saying for a while, what's the magic number? Where do we default at? This was back when it was 18 trillion. Is it 20, 22, 25? Here we are at 33 plus, and maybe this is it. This is the point where at least you default, and then you have to restructure everything. That's certainly a possibility. I don't know either if it's a disaster or not, but what I will say is that there is some downside being projected. The conflict is between the intermediate and the short term, but the short term projections down to the 40 handle potential of a spike down to let's say 40 even, 30.90, 39.90 something is possible, and then maybe you get the sharp bounce out of there again. Maybe it sets up a crazy buying opportunity. We'll find out. So anyway, I came back on. So I'll try it again. Sorry I didn't have the sound on. I had to shut it down for the end of the show. Try it again. Have a great weekend. See you Sunday night.